start again. We have Jakub Jedlinsky here. He is the co-founder and CTO of Altlift. And he also teaches all these topics on the University of Economics here in Prague. So we're probably going to get more fundamentals, more analysis, more into the topic.
Thank you. Thank you for having me. That's correct. Can you see my presentation? I guess, yes, you can. Perfect. I started teaching about crypto back in 2014 at the University of Economics, or Prague University of Economics and Business. It changed its name. And I have hundreds of international students. And their task is to make a fundamental analysis, to learn how to make a fundamental analysis and to discover whether there are some fundamentals or not in crypto projects. So that's what we do. We consult projects and build tokenomics for projects, and also we run a fund in the Netherlands and we build portfolio for our clients and try to allocate the money into projects that have fundamentals rather than just bubbles. So we will start with the fundamental analysis, what it is, and then I will tell you what we do, what indicators you can follow, and how to assess a project, because there are so many projects right now, so many ideas for tokenization, and most of them are not very valuable. So I will speak about how to distinguish. Normally, you would have three types of analysis: fundamental, technical, and sentimental. While in crypto, we also have on-chain analysis, which is like a wet dream of every macroeconomist or every analyst, that you have all the data that you can read from the blockchain, which is transparent, immutable. So this is something very special when you do analysis. But let's talk about the fundamentals, which is what we usually do. Technical analysis is more for speculation. You read from the graph what the history was, and then you try to project it to the future. And because many people do the same thing, it can give you some advice whether it's the right time to invest in something or not. But it's not about the project itself, it's just about the price of the token. The sentimental analysis is about the feelings. Today, the feelings are very, very low. People are scared, of course, because Bitcoin and other cryptocurrencies have been falling very significantly. They've been falling since the end of November, so it didn't come as a surprise to me. But still, it's rather short time, and it applies to the market as a whole, because the market is quite heavily correlated. Well, the fundamental analysis examines that particular project. Another question is whether there is value and whether people actually use it, or just speculate for the price, hoping to sell the token to a greater flow in the future. So it's the utility and nothing else that drives non-speculative demand. And for years, there only was the speculative demand, maybe apart from Bitcoin, which serves like money, like currency, but all the other projects, there were just some wishes that you believe that there is potential that maybe someday people will use it, but that's pretty much it. So for years and years, we always said that investing in cryptocurrency is like investing into a startup, into technology, and it's a very risky investment. Is this still valid? Well, not so much anymore, because since last year, some projects are actually being used. It started with DeFi. This is something that people actually do. It's not just speculating on the future. So today, it's like the golden age for the fundamental analysis, and it will be more the case in the future, because people are actually using some crypto or DLT, and be it in NFTs, be it in games or DeFi. So what the blockchain is good for? Because years ago, people thought, and some people still try to sell this idea that Bitcoin is like a panacea, like a cure for every disease, it's good for everything. It's not. It basically does three things. It solves the problem with trust for third parties. So for the first time, you can transfer or hold value in the digital form without having to rely on a trusted third party. Also, it's an immutable database and record, which is the original use case because Bitcoin was developed or invented by Satoshi Nakamoto, but blockchain technology was not. It was coined in a scientific paper by Haber and Stornida in the early 90s as a timestamping machine, like distributed, secure way how to petrify some piece of information forever. And also, it helps to deal with ego of participants in a project. So an example, you've got a shared database or shared ledger among European banks, and now you need to decide who will be in charge of the ledger of the database. Will it be HSBC? Will it be Deutsche Bank or Societe Generale? With blockchain, you don't need to deal with this question. Even if the participants trust each other, they are still they do not want to put somebody else in charge. So you have a decentralized solution and you don't need to do that. The question is, do you really need it? Because if you don't need to solve or deal with any of these issues, then you don't need to use a DLT. Another question, is blockchain cheap? Well, not really. Blockchain as a technology, it has two, or crypto economics, like the science for studying these, has two pillars, and only one is the technological one. The other one is in the economic motivation. And in order to have a really decentralized network, you need to have a lot of independent, motivated nodes. And this is a problem with many layer 2s and also layer 1s, that they just don't have this. So if you don't have this, you're building an expensive database. One of the roles of the tokens can be that it's some kind of reward for those who maintain the ledger. When there are two basic types of projects, and ones are the platforms, and the other ones are applications or tokens related to applications on these platforms. And there are two distinct things, like the highway, that's the platform, and the car, that's the application. And the question is how many types of highways, how many platforms we need. And because what people use in the end of the day are rather the cars, the application. So usually I advise nobody to build their own blockchain. If you have a good idea for a good project, still some people want or have this idea, well, we will build a blockchain for this. I don't think that this is the good idea, just like it's not a good idea to build a highway or road building company. So blockchain is not really cheap. It's not that fast. It's fast compared to legacy systems, of course, but it's not that fast compared to modern centralized databases. But it is secure, immutable, and it solves the problem of trust. So these are the very basics. Differences between coins and tokens. Coins have their own highway in their platforms, where tokens are built on them, like ERC20 tokens built on Ethereum. Now, if you want to build a better highway, a better platform, should it be should it have its own nodes, or should it be connected to a platform like Ethereum? There are a lot of layer 2s built for games, like Running for Axie Infinity, Harmony, which is used for many projects, for instance, DeFi Kingdoms, and so on and so forth. The question whether the coin should be mined or pre-mined, I don't think that it's that important anymore. And it's not that important for users. The token, the tokenomics must be addressed for every particular project in the context of it. And the same, I would say, about proof of work, proof of stake, and the alternatives like graph or directed acyclic graph. What I find most important is the specialization of the coin, because some projects, they want to do everything, but then you do nothing. And there's quite a lot of theory about it, that some functions of money are contradictory. In the early days, when I started to be interested in crypto, around 2013, every coin wanted to be the new Bitcoin. Everyone wanted to be the better currency for all the functions, to be the better store of value, but be the better medium of exchange. But it just doesn't make sense because these functions are contradictory. Different people have different attitudes, they have different motivations why to use money. Like Alice's dilemma, this is an example that I like to use. Once in 2014-15, I went to all amounts with Alice Yonda. Now he works for Coinalysis. And he asked me a question. Imagine you have 100 crowns or $100, but or I have $100, but you decide what should I do with it? Shall I spend it or shall I burn it? What would you do with it? So you would want me to spend it. Why? Just because you're a nice person and you don't want to see the world burn. Yeah, that's understandable, but would anyone want me to burn the money instead of spending it? Yeah.
I want you to burn it because I don't want you to burn it.
Uh-huh. Why?
And none of that.
Good. Yeah. But even if you are a good person, just a rational person, maybe if I burn my money, the money supply will decrease, and then the value of the money that you already have would go up. The point is that people have different intentions and they have different economic status. They are different types of agents. So if you are an engineer and you're already sitting on a pile of money, you would prefer me to burn it, while if you earn money by being an entrepreneur, by being a worker, you would want me to spend the money because then it boosts the economy, and at the end of the day, part of the money might enter your own pocket. So you always need to think about the target audience, what they want to do with the money. Why? There are no general answers to questions of tokenomics. Gresham's law, you probably heard about it. It says that if you have two currencies which are operating in the same monetary area, then the inflationary one is a better medium of exchange because people want to spend it, while the one that keeps the value or is deflationary, people will not want to spend it. So it's a lousy medium of exchange, but it's a good store of value. And this applies to Bitcoin, because with Lightning Network, Bitcoin transactions are instant and basically for free, but still people hoard it, or they keep to hold it, but they tend to hold it because of this Gresham law, because they think that this is the store of value, which prevents Bitcoin from being an excellent medium of exchange. Jan Tinbergen was the first winner of the so-called Nobel Prize for Economics, and his rule says that if you have more monetary targets, you need to have more monetary instruments. It doesn't necessarily mean that you need to have more currencies, but it's one of the ways how to do it, and it definitely makes some sense. So what indicators to follow? The specialization, the utility of the currency is the first thing to look at. Does it have a clear goal? Does it have a clear role? Or does it just want to do everything? In many projects, you have staking just because people believe that staking will push up the price of the token, and it will add some more speculation. And then you add more and more ingredients into your pot, and you hope to cook the perfect coin, which is not a very good idea. Does it have a competitor? Are there other projects doing exactly the same? Does it come with a new technology, or at least new application of the same technology in a different context? What about the developer team? Are they experienced? Are there experience in IT or cryptocurrencies? What projects have they run so far? Community and communication. How big the community is, and also how well the team communicates with the community. How do they deal with troubles? This is important because the bigger the community, the bigger the value of the project. That's the Metcalfe's law. Tradability. Where can I buy the token? Can I buy it on a reputable exchange, or are there liquidity pools on reliable decentralized exchanges? How can I get to it, and can I sell it? Is it liquid? And also, has it been implemented to hardware wallet? Can I keep it in Trezor or Ledger, or at least MetaMask? Or do I need to have some obscure wallet which is not secure? Is it only being traded on some obscure exchanges with shady market caps or volumes? These are important questions. Every new project promises that it will be listed on some of the major exchanges, but that's very complicated and expensive. And real usage, that's becoming more and more important. Are people actually using it? And if yes, for what? This gives us another indicator, which wasn't there not a long time ago. What's the market cap divided by the users? So if you have a game like Axie Infinity, and which is quite a nice game, I like it. I even played it. It reminds me of Angry Birds Epic, which I played till the end. I liked it, so I like Axie Infinity. But the valuation for one player is ridiculous. It's way, way above of traditional games or gaming studios, which are better. So, what sources to use? First of all, I always start with the web, because this is how the developers or the team around the currency wants you to perceive it. So you learn about the way they communicate and how serious they are with their intention. The white paper, are there new ideas? Are the ideas robust or watertight enough? Or are they stolen from different white papers? GitHub. Even if you are not a programmer, you learn at least how active the team is, how many commits there are, and how often they're added. The official blog, this is a source for the communication. Again, you learn about how the team communicates. Twitter and other social media, that gives you the info about how active the community is. LinkedIn, information about the developers, about the team, and media. So if a project is bigger, does it have a media coverage or not? And this also informs you about the sentiment. YouTube. I don't trust YouTubers much. I follow a couple of YouTubers which are reasonable, but that's like very little of them, very few of them. The problem with the project is that they always look nice on paper, or most of them look nice on paper, but in the end, when you do the fundamental analysis, it's more like this. So this is a scene stolen from one of the from a Czech movie about the 90s, when there were a lot of developers that promised great projects to banks and investors, and then they build nothing and just run away with the money. And this is the case for most of the crypto projects. So, is it easy or difficult to find a unicorn? Everybody wants to find a unicorn. Everyone Everybody dreams about going 20 years back to the dot-com bubble and buy Google or Amazon. Everybody wants to be the new Google or Amazon. My point is that you don't need to do that because it's very difficult to identify these successful projects. But there are 99% of the projects which are shitty, and it's way easier to identify the shitty projects and then short them. And that's exactly what I do at the moment. No, it's back on. Yeah, so I'm not very unhappy about the market situation today because I identified a couple of projects that were falling way faster than Bitcoin, and then you can build some liquidity to reinvest it or buy crypto when it's in the dip. So this is easier. You can just focus on the project which are no low caps. Low caps are too wild and the price is easily manipulatable. While projects in top 100 on CoinMarketCap, some of them are ridiculous or overvalued, and you can just short them. So, how to design a good currency? You need to answer a couple of questions. Does the project itself make sense? Is the problem they're saying they're dealing with a real problem? Or is it just nobody's issue? Does it need a blockchain? Does it need to have a decentralized solution? In one of the first slides, I said there are basically 3 things that a DLT can do. So is this one of the cases? Usually the answer is no. If yes, does it need a token? Again, usually the answer is no. If yes, does it need its own token, or can it just use Bitcoin or any other token? And will there be a real utility? Will there be a demand for the token? Who would want to buy it? Many projects think about distribution of the token, how you will be rewarded for some kind of activity with the token, and then you can sell it. Yes, but who would buy it? That's the point. Who and why would buy it? Who's the target audience? So the question of demand or the demand side of the market is way more important than the supply. Of course, the supply is also important. Is the distribution reasonable? Do they have a reasonable distribution schedule? Or do they just give 60% of the tokens to the developers and VCs and their friends? So this is a more advanced question, but also it needs to be answered when you identify a reasonable project. Also, if you keep too many tokens within the team, it might trigger some regulators. So it's a regulatory red flag as well. Then, okay, so how to identify the business plan? Now I'm talking about the business plan of just the project as it is. So will there be some money? Because it's like a business project. You have a product, you want people to use the product and you want to make money on that. Does it make sense? Even in non-blockchain businesses, many entrepreneurs just draw this hockey stick graph and somehow magically, exponentially, the profits will go up and the revenues will go up. So instead of that, we use Minsky, which is a software developed by Steve Keen, the winner of the Reward Award for the best prediction of the financial crisis in 2008. And it's designed to do exactly this, that you put parameters, variables, accounting tables, and you monitor the flows of money and flows of users and stuff like that, so that you can do some actual math and calculus and get to more reasonable numbers and more reasonable graphs, which are not just wishful thinking. In these models, you have stakeholders, agents, which have different motivations. You have groups of agents which have different motivations why to use the token. Some of them will just be speculating. Some of them will get the rewards, but then they will just put it into the market because they don't want to do anything with it. They just want to sell it, cash out, and that's it. Some of them will want to use it in this scenario or another. So you need to identify the agents and their behavior. And then you start thinking about the token and what it should do. And the point is that if you do a rigorous model, the outcomes of it will surprise you. So you will need to change the parameters, change the speed of the distribution again and again, and then you might come to some more reasonable or sustainable outcome. The problem is that vast majority of the projects in crypto, they don't do anything like this. And then their projects fail. And before they fail, they realize that some of the stakeholders, some of the nodes or types of nodes, they just are not incentivized enough. The rewards are too small. So they have a bubble and the bubble is leaking. So they fix it with the duct tape and then it's leaking somewhere else. And then they remake the tokenomics again and again, like FIDA. FIDA is a good project for streaming video. It has a lot of strong partners. It has millions of users, but it has a lousy tokenomics because they never done anything like this. And that's why these projects will fail sooner or later. Because you don't know the parameters, there is no way how you can know the parameters, you just know ranges in which this can be. You need to make a Monte Carlo simulation, so you randomly give numbers to these parameters and then you rerun the simulations, and then you take some averages and it teaches you about the boundaries and about the possible scenarios that can happen in the model, so that you can expect in advance what can happen and prepare for these red flags. Because the models often crash. And it's better if it crashes in the model than in the reality. What can the tokens do? I'm almost finishing. Utility tokens, that's good if there is the utility. So what's the utility? What can it do? Is it a voucher for a service? Is it a forced usage? Doesn't mean that, well, I have a brilliant product, I have a great service, but you only can use it if you buy my token. Not bad, but not great either. Yeah, not great, not terrible. It's better if you can use the service without the token, especially if the service works without any crypto whatsoever, and the token just enhances your experience. So it's a way how to gain more customers, more clients, or to improve their experience so that they stick with your project and don't run to competition. Some exclusivity, it's like with NFTs, you have the NFT and now you are a member of an exclusive club. Well, that's great. You can do the same thing, but fungible tokens, so you can get some exclusive bonuses, or it opens you some secret parts of the app or of your experience. So this might make some sense. Gas fees, this applies to the platforms, to the highways. This is clear enough. That's pretty much enough what it can do, which is with ETH or Ether does for Ethereum. Well, but it's difficult to build a highway because you need to motivate the nodes and you need to get tons of them. And not just nodes, but also full nodes to keep the copy of the blockchain. It's quite complicated. Currency, I don't think that world needs more currencies. Bitcoin does that quite well. It's great if you have a liquid token which can be used as a currency. Why not? But it's not designed to be one. Bitcoin is designed to be store of value and a reserve currency, and I don't think that anyone serious wants to compete with it anymore. I don't think that anyone wants to do that since like 2016 or something. So even today, and more so in the close future, people will not care about what currency they have. They will just pay with the currency that they have, and the receiver of the transaction receives the currency which they want, and the transaction or the exchange happens seamlessly in the background. Nobody knows about it, nobody cares about it. You can also have a marketplace with the currency, and it's like the forced usage. You have a designated marketplace or designated currency for a marketplace. Well, it can work, not great, not terrible again. Security tokens are more problematic because it's somehow illegal, it's a gray zone, but if your project becomes bigger, you will have troubles with the regulators. And many people, I would say, are not serious enough about this. Governance tokens, yeah. I'm not a huge fan of governance tokens. I like them very much in theory. They allow us to experiment with some new ways of governance, which is amazing to be part of it. The ways we govern our society, corporations, politics, they are outdated, heavily outdated. Like Harari said, they correspond with the Industrial Revolution in the first half of the 20th century. So we need something new, but we are not there yet. Using these governance tokens, we are rather discovering the wrong ways. Well, this is not the way. This is not the way. But because it's liquid, it's tokenized, then you can change your opinion. And people are very honest with voting with the tokens because they're voting with their money. That's amazing. There are many projects which only have governance tokens, like Uniswap, but who would like to make the governance about a DeFi protocol? I wouldn't. So who's the target audience? Maybe some VCs, but for a normal guy, it doesn't make any sense. Again, I like Axie Infinity, but they have a governance token without any governance. I can imagine governance tokens in games because some players would want to sell their grandma just to be able to add some new features to the game or vote about some rules or create new items, but that's not what the token does. That's not what it does. I used to be an in-game developer, and I was responsible for things like that. So I know that the community is very excited about governance. They will work for you for free just to be part of it, but that's not what most of the governance tokens do. They do nothing. And yes, stable coins, of course. That's it, ladies and gentlemen. Thank you very much for your attention. I can't see any questions.
Right. As an economist, what's your point of view on El Salvador and the friendship with Bitcoin?
Yeah, this is a brilliant question. Thank you for that. They have not very much to lose because it's one of the poorest countries in the world with highest levels of criminality. And the president was brave to do that. But I'm quite skeptical about it in the long run. I think it's great that it happened, but if I was an inhabitant of El Salvador, I would be quite afraid that once Nayib Bukele does not win the election, if he doesn't get re-elected, maybe the Bitcoin will just get lost. Also, this is this is an interesting experiment because most of the people just don't want to be self-reliant. They don't want to keep money on their own to be the key keeper. So they need the trusted third parties. That's why El Salvador provided the Chivo wallet, and there were reports that some of the money was stolen or disappeared from it, which is the risk of the trusted third parties. But what I like about it is that you still, as an inhabitant or citizen of El Salvador, you can use your own wallets. You are not forced to use the centralized Chivo. So I'm glad that it's happening, and it's risky. It might work. It might work because they were the first. So they attracted a lot of attention. Now perhaps billions of people know about El Salvador and where it is. So it's nice. Investors, miners might come there, and it's happening. So it might be a good bet. But if it was a richer country, which with more at stake, I would not recommend such a move. Do we have any other questions? So thank you for your attention.
Maybe
Again? Yeah.
You were talking about this island. So today you have people on the ecosystem of the really long. Do you see the future of interoperability between these layer ones?
Yeah, absolutely. And we have just finished a project as a consulting company. We consulted tokenomics and usability of tokens for a project doing just like that, like facilitating money transfers between layers on Ethereum and between platforms. And yeah, there are ecosystems like Cosmos trying to do the same thing. And of course, then there are centralized services like Binance, which basically also can be used to do that. I wonder why Binance doesn't focus on that part of the market more. So yeah, definitely it makes sense. I like the layer twos. The problem with those is that they usually have technical issues. Even the biggest ones, for the biggest games like Immutable X for Gods Unchained, I've been trying to withdraw money from that since Tuesday. So that doesn't make me very happy now, right? Because I wanted to sell on Tuesday, not now. There are very often problems with running, which X Infinity runs on. So users want to have a smooth experience. They don't care that much about the technology. They don't care that much about decentralization. They want it to be cheap. They want it to be fast, and they want it to be reliable. And I don't see any chain or layer that does that in full. That's why interoperability is important, so that you can switch with your project from one chain to another. So that's what hacking does, for instance, and it makes sense, at least now.
All right. So thank you very much.
Thank you.